How's it going, guys? Good afternoon. What an incredible day today. We're going to dive into the charts here. We're going to dissect it real time. We're going to see what we're looking at here, what we can expect for the remainder of the week. Today is Monday, October 26th. We're going to look at the SPY. We'll look at the QQQ, the IWM, and if we have time, we'll look at the XLF. Welcome. This is Patrick, and you're trading with Prime. Wanted to get this video out to you guys. What a bloodbath of a day. The question now becomes, is it over? Is the bloodbath, blood in the streets, is it over? Was that the end of it? We will see. Time will tell. Hopefully this video will give you a little bit of insight what we have for the remainder of the week. Keep in mind, we do have a lot of volatility, things that can impact the market, everything from trade war, stimulus, whatever the flavor of the week is. Oh, by the way, elections. We have all of that coming around just around the corner. And, if you're new, again, welcome. Hit the subscribe button, hit the bell notification. We go live every Sundays, 5 p.m. Pacific Standard Time, so we can walk through some of the charts, some of the things you guys are looking at. First thing I have to say is right off the bat, I was not expecting a day like today. Absolutely was not expecting it. I did have a plan in place to limit my risk to the downside. I did also swing a full position. Rather, I shouldn't say a full position. I swung a position in a lot of the broad market stocks, S&P 500, IWM, Apple. So some of the names that I've swung over from Friday into today. We had amazing prices on Friday. We did buy the dip Friday. That dip turned into be this, what we see today is like almost a bloodbath. Definitely stopped out of the trades. And some people, I had a trader ask me today, why isn't that I kind of, why don't I panic or why don't I freak out about it? And my reply to him was, I try to limit my swing trades, especially on the weekend. But not only that, I try to limit risk. I'm not going too heavy on my account. So if I am down, it's not tremendous amount. I can recoup the losses. The second part of that is I do take stop losses. So today I took a few stop losses, and I'll go into the intraday charts and kind of walk you through that a little bit. So that's my answer. If you're stressing out, a little bit of a tip is if you are stressing out about these trades, you might be positioned a little bit too heavy in your trades. It should more be an automatic thing because the truth is we don't know what way the market is going to go. Nobody knows what way the market is going to go. You might have a trade idea or a trade setup that looks phenomenal, and maybe it is phenomenal, but if a little bit of bad news comes out, that phenomenal trade can turn into quite the messy scenario. So what we're looking at is the S&P 500. I apologize if I'm talking fast. I do want to get through this video as quick as I can and also give you guys enough information for the week. So what we see, just looking at the chart right now, the S&P 500, I'm going to zoom in just a little bit so you can see the candlesticks here. And we do have this high of 358.75, which is definitely resistance. And then below that, you have a high of around 353, 354, absolutely resistance. And what I was calling a bull flag, and the reason why I was calling it a bull flag is you had this up move like this, and it's been consolidating ever since. I'm no longer leaning to the point of the bull flag should have played out by now. It didn't play out. One thing I want to keep in mind, though, to make the bears aware of this, is we still are in this. Now we can just call this a channel. Let's just call it a channel. We don't have to call it a bull flag anymore. It's definitely a channel. You have your resistance at the top. You have your down sloping trend line. And by the way, it acted as support today. Price fell through that level a little bit today. And then it also have this horizontal support down around 335.62. which by the way is today's low. So I did put out an alert at the end of the day or near the end of the day calling for, or just keep people in perspective of this could be a low today that we were seeing on the chart. I'm going to zoom in for you and really pull it up on the screen just so you can kind of see. Now you can see where the trend was broken on the bottom down here. You do have a reversal candle down here on heavier than normal volume compared to throughout the day. You had a little bit heavier of volume. Before the end of the day, as it was selling off down here, I put out an alert saying, you know what, I believe that the bottom is now in until it is not in. And what I mean by that is if you're long against the low of that candle today, that is okay to be long. Again, possibly limit your risk by lowering the position size as far as swing trades. I'm going to do this now. I'm going to go back out to the weekly time frame and kind of show you why it is that I think that that was a low until it's, you know, quote unquote a not. Here's the thing is what I was looking at is on the weekly time frame. This is where trading becomes not just dynamic, but it becomes all encompassing. We have to look at every single chart. We have to dig through them until we find evidence leaning one way or the other. And as you can see the definite high up here. You see a low down here. The market tried to rally. It rallied all the way up, probably halfway up. If I flipped it back to a daily chart, you would see a big red candle in here, and it's about halfway up that red candle. And what we're looking at is, why was this a low today? Well, it's kind of around this. I actually had support just under this price, and I'll give you an actual price of this. The low of this weekly breakout candle, the low of that is 334.38, and the price today was 335.62. Pretty close as far as was that a test of that low. And so what I'm going to say is this: there is no reason why we should see the prices down this low again. Now that doesn't include, I'm going to go to an intraday time frame again. I'm going to go down to the hourly. Let's go to the 15-minute chart. Now looking at the, I know I'm bouncing around on you guys, but just work with me here. If I zoom in a little bit further, now you can really see these prices on your screen. Now imagine this for a moment. We come into tomorrow and the market opens. Let's say it opens down here somewhere. Let's say it gaps higher in the morning. No matter where it opens, it can always go down and run a test of these lower prices. The way you know it's a test or not is if it's a test, price will immediately rocket away from that area. There's no reason why price should shoot down there in the morning and then consolidate. If it's consolidating down there, it's probably not the low, and I would imagine these lows are going to get taken out. You want to see price on a retest. You want to see it shoot down. And in fact, I don't even think that if it was going to go retest, it would probably be around this area or down here. And I'll give you an actual price of that one. That area is around 337.36. That would be an optimal area for price to go retest. I don't think that, you know, if it's just a retest, I don't think it has any business being down at these lows again. However, it's possible. You know, we'll just say that it's possible. Pretty incredible volatility today from the high of the channel all the way to the low of the channel. Was not expecting that. We will see what tomorrow holds. We have a lot of earnings coming up this week, so that's all something to look forward to. If for any reason price gets up to this area around here, around 341, I do expect that the bears will try to defend that area. This price level is going to be a lot of resistance around this area. So if you pull up your at least your 15-minute charts anyway, price, totally understandable that it would be rejected at this area up here, or at least some sort of resistance at that area. I'm going to go to an hourly time frame. Maybe we can get a different figure on the hourly. As far as resistance, let me zoom in a little bit for you. Okay. Bear with me. So looking at this, now we see a little bit different on the screen. Now I can look at this area and say, okay, well, there's probably going to be some resistance. As you can see, it acted as support previously, Support fell through. So I would definitely expect that area to act as some sort of resistance if we got back up to it. And that, I'll give you an actual price. It's the high of this candle of 341.59. That's going to be some serious resistance. You also have some down here around 340.20. And then this area that I was talking about, the retest, it might want to go down and retest 337.31. It is possible that we go down, like I was saying before, it's possible we go down and retest this area. But again, you want the retest to be fast. You want momentum to shoot down there and then shoot away for the retest. You don't want it to go down there and consolidate. Let's go to the Qs. Qs, so it's a similar kind of scenario, and possibly what's kind of holding up the Qs is probably waiting for some sort of earnings. There are a lot of big names. The earnings are coming out, and you do, first thing that catches my eyes, you do see this bear flag, bear consolidation, and it looks like it finally played out to the downside target. And also you have this 50-period moving average, 50-day moving average that acted as support, and then you have this gap down here. Of course, that's going to be a little bit of support. There was a previous gap down here. So those are all things to consider. Maybe it's going to consolidate for a few days and then sell off again, or maybe it will consolidate and then rally depending on earnings. You have Apple, Amazon. There's a bunch of different earnings coming out this week. So those are all things to look out for, all possibilities. And again, I don't even know what the headline was. I didn't actually go read the news today as far as what it was that was selling the market off. I mean, it's too hard for me to keep up with the charts and the news at the same time. And I think a lot of times that affects my, when I'm get too busy watching the news, sometimes it'll affect the way that I trade, and it's easier just to trade the chart than to try to pay attention to the news. In fact, most times by the time you get around to actually looking at the news, you're already too late anyway. So same kind of thing. If I put it on the hourly time frame, you can kind of see that this is possibly a low down here, and the difference of this is you have a gap. I'm gonna put the cursor on the screen. You have a gap all the way back here, and the opening of this gap is 276.35. What gap am I talking about? There's a gap right here, and this is a gap window. So the high price, and then you have this gap coming across here, and I don't know if it even filled that. Let's take a look here. The opening price again was 276.35. The low of today, 276.76. So it didn't even fill the gap, and then it rallied away. That's normally bullish. That's not bearish. However, anything is possible. Like I said, maybe it's just waiting for earnings before it turns around and, you know, maybe it'll want to sell off. We'll see what happens. Definitely indecision day. You had a lot of volume today. Of course, that's to be expected on a volatility day. It's expanding, and so what that means for expanding is we can expect from this point forward, you're going to see a large swing to the downside, larger swings to the upside. It'll kind of expand as you see on the screen. Be mindful of that. It can also get really choppy, which makes it really, really difficult to trade. So just be very careful. Maybe the only tips or suggestions that I would have is basically try to lower your risk a little bit. If you're normally used to trading 10 option contracts, maybe only trade 1 or 2 or 3. Just, you know, and since we're on the subject of options, be very careful when you're trying to buy these dips or buy the falling knife or try to sell the rallies. It's gonna start getting really expensive. Today we saw that already. Prices are gonna start getting more expensive because it's anticipating, option traders are anticipating the expansion of volatility. Let's go to IWM. Same thing. I almost, it's not that I want to call this a reversal candle on the daily chart. Like, I don't want to look at these candles and say, well, that's a reversal candle and it's on heavy volume. It would have been way nicer to see the bulls close this thing back up near the highs of the day, but that would be a pretty wild move. It's possible we gap higher in the morning, and I don't mean above 161. I just mean we could gap higher than the close today. But with that said, if we get a little bit of bad news like we saw previously, if I do this and go back out to the charts like this, as you can see in this, if you follow my cursor in this gray area over here, you can see where volatility started to expand. You had these huge moves down, these huge moves up, and just it was all over the place. Extremely difficult to trade. The difference between now and back then is back then price wasn't respecting too many technical analysis lines that you could draw on a chart. It wasn't respecting that. It was cutting through them. Kind of like we saw intraday today, where price was just shooting through all sorts of levels. That is not something that is, or that's kind of a scary thing to go through. But that's what a lot of traders are expecting. Where fear is beginning to pick up in the marketplace. We could go look at the VIX, the fear indicator. You can see that as fear comes in, less and less technical analysis plays a part, and it's more about fundamentals and the market looking for any reason to turn around. The funny thing with that is that a lot of times you'll see the market turn around at levels that technically make sense. After the turnaround does come, you can look, hindsight is always 20/20, and you can see that the market decided to turn at key significant areas. So IWM, same thing. We have a lot of volume coming today. We're back up in this range, and the range is a little bit different. IWM, you had this up move like this. You have a different range that's somewhere like this. You know, you could draw a line down this way, or you could draw it straight across. However you wanted to draw, that's not the point. Is it's still consolidation in the IWM. I know that would have been an amazing short trade to take from Friday to today's low. So for those of you who are like beating yourself up, it's not easy. Trading is not easy. Nobody could have predicted the market was going to sell off over the weekend. And even if you did, the opening prices today, if I could do something like this and go to a 15-minute time frame or a 5-minute time frame, you can see how when the opening bell came, it sold off a little bit, then it started to rally. A lot of people got psyched out and thought that was the low. Today's first 15 minutes of the day, that was the low, and the market started rallying away. If I do this, I can go to Apple really quick here. And, look at Apple, for instance. Apple rallied first thing this morning. You had this huge rally in Apple, and then it started selling off again. And let me zoom in and do this really quick. You can kind of see it a little bit better. I mean, how many, raise your hand if you thought, but go ahead and leave a comment underneath the comment section of the video. Did you think that today's opening price was the low in Apple? I'm going to raise my hand and said I did believe, even though I didn't take that morning trade or whenever the trade was, I tried to average into my position from over the weekend. It worked out for a while until it didn't. And then eventually I got stopped out of the trade, and then I entered back again near the lows. And so the thing is it's very convincing. These rallies are very convincing, just like the closing prints were very convincing. As of right now, this can definitely be one of the best short opportunities. And then watch, tomorrow we're going to open up down here. I mean, that's absolutely possible. It is in a downtrend, so you got to be very careful with this. We are in a downtrend. So the saying goes, for the downtrend, we want to sell the rallies, you know, and not necessarily be buying the dips. But nonetheless, very convincing on the opening moves of Apple. Let's go to the XLF and wrap it up. So, I mean, what I really want to get out, and the whole point of this video, is that we're not always right in trading. We can't always be right. We may see things that we think are really there and they're not actually there. Sometimes trading is more about managing risk, and sometimes it's more about entering a trade, but knowing full well at a certain point you need to cut your losses and saying, you know what, if it gets below this price, I know that I'm wrong. I'm not right in the trade. And it's admitting that I was wrong in a trade, like the trades I took over the weekend, admitting that I'm wrong in that trade, even though I would do it again because the risk versus reward was completely was amazing. There are some times when the trade goes against you, and how do you know at what price am I going to be wrong? There are a lot of traders in the beginning, especially when instead of cutting the losses, they add to their position, just making it worse. So it's more about finding that niche and what price level you know that you're wrong, as opposed to what price you know that you're right. Okay, let me get off my soapbox. So here's the thing, XLF, you saw, again, you see this up move, and if I zoom in just like this, now we saw last week the banks were having a little bit of help from the yields. I did notice that last week, but you had this up move, it's pulled back, consolidated basically. I don't know, I don't like this price action. I don't like that it's consolidating after this pullback. It needed to pull back and then rally away, and it hasn't done that yet. It has a lot of work to do. And let me zoom out a little bit so you guys can actually see the pretty bright up there. Okay, so anything is possible. You know, we can look at these lows and say, sure, you could be long you could be long using this low as the stop loss. That's absolutely fine. But you also have a low in here. You have a gap. You have this price area down here. If the XLF did start trading down here, maybe 2381 would be a good place to enter. In fact, it would put this bear flag thing in play. Like you'd have a down move, a run sideways. You have another down move that's about the same distance as far as symmetry goes. So that might be a good area to lean into. As of right now, I would not be interested in taking a long trade in the XLF until we started seeing higher prices, probably above $25 a share. So a lot of work to do. If you go to the intraday time frames, like the hourly chart, it's a little bit more whipsaw-y. And you can't really tell right now. If I zoomed in a little bit more, you could, there we go. So now see the difference that it makes. It's a lot more whipsaw action. And here it's a little bit different because I see almost like a bear flag being thing that could play out. And so maybe we do want to see a little bit lower prices in the XLF. You know, can you be long against this low? Yes, you technically could be, but you got to be careful because we could just easily gap down here in the morning. And that really goes for all of them. All the charts that we just went over, price can always gap lower in the morning. That's where you as a trader have to decide what the best setup is going to be, what trades you want to take, and the most important part, how much risk you want to apply to all this. So that wraps it up for this video. Be sure and hit the like button if you gain value out of this video, and feel free to subscribe. Again, we go live Sundays, 5 p.m. Pacific Standard Time. We will see you in the next video.